Session of the week.
James, a bit of a relief that we saw the market gaining, especially after the horror week, which was last week, where we saw the market reaching a new low in the correction at 5,351 points. And of course, we saw the banks lower, we saw the energy space lower, and we saw the materials space lower last week. Today, we did see the banks and some of the yield-based stocks bouncing back. Telstra having a mostly good day, although the miners still losing ground there. CBA was the most traded stock. If you rule out the $600 million worth of stock being traded there, it would have been a pretty quiet Monday. But Commonwealth Bank, Westpac, ANZ, Telstra, these were the most traded stocks on the market. So the yield trade certainly coming back. And I think that's because last week what you saw in terms of the bond market were yields once again becoming much smaller, and of course with the banks just trying to absorb the capital raisings going on, we saw the share prices falling there. So we saw a little bit of a disconnect between what was happening in terms of the banks and the bond yield prices, bonds, and of course there's been a pretty strong relationship over the last couple of years. Just having a look at those two charts, and this is Commonwealth Bank against the bond index in Australia. You can see last week, because of last week, we've seen Commonwealth Bank dropping off while we have seen bond prices rising because yields have been compressing there. So no doubt that the banks are probably going to play a little bit of catch up. The big test for Commonwealth Bank will come tomorrow when it does trade ex-dividend. I think today we did see some support coming into the stock as it traded ex-entitlement and of course ahead of that ex-dividend date.
Mike, your thoughts explaining why we saw them generally move high, but Westpac in particular a standout. Any particular reason for that?
We did see Westpac moving higher, and it came out with its third quarter capital update. So it does look like Tier 1 capital looking pretty strong for the time being at about 9%. And not only that, through the first half dividend reinvestment plan, I think they managed to gain about 58 basis points there. So it does look like Westpac creeping up that capital strength ladder through that dividend reinvestment plan and essentially not riding that sort of dilution of capital through that. So Westpac had a very strong performance, up around about 2%. And I know we're talking a lot about the banks, but I think it was really quite interesting what was happening on the small end of the market as well. I mean, it's been a horrible earnings season for a lot of the large caps, especially with the capital raisings that we've seen through from the banks. But consistently, we are seeing some of these small micro caps reaching all-time highs day after day, week in, week out. And some of those are Capilano Honey, OnePage, Alexium, as well as Catapult. So if we have a look at Capilano Honey, it's a honey company looking at strong exports to Asia. Catapult looks at sport analytics. You'll notice that a lot of the rugby players are wearing that black band. OnePage is cloud HR services, and Alexium is a fire retardant material, and they're doing some contracts in terms of potentially the US military. So some interesting things on the microcap side, and I think the point here is that in terms of some of these smaller companies which are managing some strong growth numbers, I mean, the performance has been outstanding over the last 52 weeks, while the rest of the market has been quite poor. Last week, we saw the ASX 200 index reaching a new low in terms of this correction. So there are stocks doing well, but unfortunately, in terms of the large caps, we're still way down. I mean, just the fact that the Aussie dollar has fallen so much over the past year is a massive positive. If we have a look at gold prices in US dollar terms, gold prices are down 15% over the past 52 weeks. But the fact that the Australian dollar against the US currency has dropped even further, down 20% over the past year, means that it's good news for these gold companies like Newcrest Mining that do have their costs in Australian dollars but sell into US dollars. And that's really what we're seeing here. So if we have a look at Newcrest Mining, costs are down. We did see all-in sustaining costs at $789 US an ounce. That's down 12% from last year. But if we have a look at gold in US dollar terms, still things are looking pretty hard. I guess the difference for these gold companies is the fact that we've seen the Aussie dollar dropping so substantially.